Yeah, good afternoon, everybody. I'm Ed Parrott with Keller Williams Realty here in Knoxville. My guest today is Lisa Stepp at Step Up Your Game, and she's powered by Empire Mortgage, and she is an excellent mortgage broker. If I say so myself, she helped me out of a jam a few weeks ago with a contract, and it was great. We'll talk about that a little later in the video before we shut everything down. What we're going to talk about today is are you ready to buy a home? And the first step in that is being financially prepared. So I wanted to go over some items with Lisa and we'll get into it here. So, Lisa, do you have any introductory remarks you want to make, or you want to just start with my
Yeah, let's,
questions?
I'm a 23-year veteran. I can't believe I've stayed in this industry that long, but here I am helping people obtain home ownership.
Well, that was short and sweet. Now, you are
Yeah,
here in Knoxville also, but I will
I'm
point
here in
out that you
Knoxville.
have how many different mortgage companies do you have access to? It's something like 60 or 70, something like that, is it?
We're over 90 right now.
Okay.
Um, I like being a mortgage broker because it's not just one and done. There's always options. Somebody always has some special going on. And it's just a great way to service your clients because you have so many options.
And the other thing about it, I'm curious because, well, not curious, interested is the word, because you were telling me that you have different mortgage companies that kind of specialize in different things, and they're kind
Mhm.
of located all over the country. And one in particular that I found highly interesting because I myself am thinking about doing this is you have a company out in Texas, I believe you said it was, that specializes in barn dominiums,
Barn
and barn
dominium.
dominiums are becoming very popular. So,
Very popular. We actually, for a new build barn dominium, we have three lenders now for construction to perm financing, and it just starts with getting pre-approval. The contractors must be approved. Each lender will have different guidelines. We have government financing for barn dominiums now with one of the companies that we do business with. So it's becoming more and more all encompassing.
very good. So, in preparing to buy a house, the first situation that people need to take care of is assessing their finances. And this is kind of the last thing a lot of people think of. They want to go out and start looking at houses, but they need to assess their financial situation. The first thing they need to start off with is getting a good credit score. Now, in the past, they have had kind of a guideline of plus 700 on the credit score. And of course, people can go out and look at their credit score online. And there's Equifax, Experian, and TransUnion. So they can look at those. But now, even those three credit bureaus, they have different types of credit scores for like home purchase or auto purchase or that sort of thing. Based on the 700 credit score that I've heard in the past, can you update us on that? Is that still a number we're shooting for? What's kind of a minimum number that you can get approved?
I have
What's
lenders. Well, let's talk about credit score first. So
okay?
it's very frustrating to my first time home buyers when they're on Credit Karma or if they have a credit card. All the credit card companies pretty much will give you some kind of free credit monitoring service. Oh my gosh, I've got a 740 FICO score, whether or not it's coming from Equifax, TransUnion, any of the three bureaus, right? And
Right.
then we pull credit and we're like, no, you're actually about a 680. So frustrating to those borrowers, or because a credit inquiry for a mortgage is different than any other kind of credit inquiry. And it's just based on algorithms, very complicated. I am not an expert in that field, but if you think you have a 700 because Credit Karma is telling you for your mortgage mid FICO score, that may not be the case. It could be lower.
Now you did
But
mention mid FICO score, and as we said,
yeah.
there are the three credit unions or the credit bureaus out there. Do different mortgage companies have a preferred reporting agency, or do they always pick the mid score, or how does that work
We
generally?
always, each credit bureau, whether or not it's TransUnion, Equifax, Experian, they will all generate a number. And because every creditor may not report to each of those bureaus. Maybe they just report to TransUnion. Maybe they just report to Experian. We want to capture the middle. And there could be big swings between the high number and the low number. So we take the middle of the score. One of the first things we do is with a mortgage application is have authorization and, to pull credit, to kind of see what their credit picture looks like. We do have lenders that'll go all the way down to a 500 mid score.
500. I'm kind of shocked. I was thinking
Those,
maybe
those will
630
come
or
with,
640, but
yeah,
500? Now, I'm
500.
assuming somebody with a 500 credit score is going to have a seriously higher mortgage rate.
Higher rates, bigger down payment requirement, possibly reserve requirements. Each lender has their own different guidelines. And that's why I like having so many different options. I'm the one who has to do all the busy work. Like, okay, what kind of product do you want? Who's the best according to that borrower today? If I take an
Okay.
application, we're going to the closing table unless something unforeseen happens.
I have to say, I'm really surprised at the 500 number. I had no idea. And of course, I'm not a mortgage expert. That's why I
Right.
talk with you. But 700, as I say, has been what I've had in my brain as kind of the desirable FICO score. What
740 plus will get you the best.
that was my question. What kind of score do you need to get
740,
the lowest rate? 740 and above will
740
get you the lowest
plus.
rate.
Mhm.
Speaking of that, and of course, I know it's very volatile right now, and we got another Fed meeting coming up on November the 6th. Well, the 6th and the 7th. The 7th when they'll announce their decision. But what is today's 30-year average? Have you checked on
I,
it
I,
yet this morning?
I don't even know. I don't even know. They've been moving up and down all week.
Hmm.
They are,
The last I looked, it was like 6.3, but that was last Friday I looked.
oh yeah, we've taken a big jump since then. 6.875.
Holy guacamole.
Came down a little bit yesterday afternoon. Market opened up a little better, and it's very disturbing to a lot of first-time home buyers. You can Google anything you like, but whether or not that is true and accurate may not matter. What's your
Uh,
FICO score? What's your product? How much money are you going to put down? All of that impacts your rate. I
uh,
always caution everybody with that national average because it is just an average.
we've established kind of the low end and the top end of a FICO score in terms of getting a mortgage rate. So we need to discuss a little bit about what people can do to improve their credit score.
There are a lot of different options. It depends on how long that credit profile has been open. I do have 3 companies that I work with. And most of our companies that we deal with that we run credit through, they'll give us some synopsis of, if we have somebody that's like a 599 and we want to get them to 620, it'll actually show us because it depends on how much revolving credit you have. Do you have a car payment? Have you had a mortgage before? Different things are differently weighted. Maybe they have a $1,000 credit limit and they're at $999. That is going to cost you some FICO point. Can we get it down to 200? So there's all these tips and tricks out there that we have access to if we're trying to get into like another FICO bucket. Revolving credit, the amount of credit, how much of your total credit is available is a big number that will
Mhm.
move you up or down quickly.
The higher your percentage of credit you're using, as you were just stating, the more impact it has on decreasing your credit score. Can you give us some guideline as to what you got to get below? Is like below 40% to be considered good or below 30% utilization? What do you think?
I look at Credit Karma for myself, and like if I just stay under 10% credit usage, I'm good. In my opinion, the lower the better.
Hmm.
And there's some tips and tricks too when you're using credit. If you pay it off before the statement comes out, then usually the first week of the month is typically when all your creditors will report to the bureaus. You can manipulate it a little bit right there if you have.
Are you saying then that let's say you charge something toward the end of the month and it posts and you pay it within like the first 10 days of the month, then it will show the activity, but it will also show that you've paid it. And so it won't really impact your, well, in fact, it should help your score at that point, I would think.
Yeah.
Okay.
So there's, that's always, that's been an old school, not only know what your your due date is, but when that statement generates. Pay it off before that statement comes out, that balance would never increase.
Now, what we've been talking about right now is kind of like pre-planning, getting ready to apply for your mortgage so you can get your credit score in a good shape there. Once you have actually applied for a mortgage, you don't want to damage your credit anymore after that because you can get a pre-approval and even be in the underwriting process. But if you do something like go out and open a new account, that's going to impact your credit score. If you charge a bunch of stuff on existing accounts, that's going to impact your credit score. What other things, other than the two I just mentioned, might somebody do to damage their credit score after they've started the process of applying for the mortgage?
Buy a new car. When you first start talking to a mortgage professional, and if they don't educate you, is if, you got to have the mindset, no more credit. Do not go open new credit, because once we have that established baseline of that credit, let's say we're getting ready to close, the lender's going to do a soft pull of that credit. And if there's all brand new credit, guess what? Does it impact your DTI? The
Debt
house
to
that I
income
currently
ratio,
debt to
let's,
income ratio.
yeah.
And I am, I have a story that, we were building a new house, and the house on the corner was done, same style. And I'm
Mhm.
like, oh, it's a corner lot. I want that house. No, there's 2 contracts. I don't really care. Why did this house become available? Because they bought a new car. They lost their approval. Things like that do happen. Getting a mortgage, we try and keep it as stress-free as possible. Wait until you close and your loan is funded, and then go to the furniture store.
Very good. So we've talked about getting your credit in order and applying for the loan, but we need to also think about how much budget you need to allocate toward your home payment. So I recall 25% being the kind of the standard value, but I think it's been going up. So can you talk about that in terms of how much percentage of, and are we talking gross income or net income? So take that away and educate me.
Well, when we qualify in the pre-approval process, we do want to see 30 days worth of pay stubs, depending on what kind of income earner you are, possibly 2 years tax returns, 2 years of W-2s, and we use your gross income. And there's all kind of rules with the different mortgage programs out there that tells us how we get to derive income. And a lot of things that I have seen recently is the benefits that our employer offers us that we may take advantage of. It's not your medical insurance for your family, could be $1,000 bill. That's coming right off your pay stub. So I like to look at net. And my question to my clients are, what kind of payment are you comfortable with? Is it 25% of your net income? Do you want to push the envelope because depending on their job, they know they're up for a promotion? Maybe they'll push it to 50%. Everyone's a little bit different as to what their comfort level is. But to go into a new home, I tell everybody, hey, you know what? You're not going to have rugs on your floor. You're not going to have curtains hanging. And everybody wants to go to Target or Kohl's, and it could be $1,000. It could be $1,500. Everyone's a little
Mhm.
different. Everyone's so excited they get into their new home. Now there's some big expenses because maybe you do need a dining room table. Maybe you do need a kitchen table. Things are different, and there's a lot of expense on top of moving.
Mhm.
You have to pay utility hookups. You got to have some reserves if you can, and take that all into consideration.
So the mortgage company underwriters are looking at gross income, but the consumer may look at net income. And if they're willing to push their payment up to even as, and I've heard this and I hadn't really seen anybody do it, but up to 50% of their net income, as long as that is still under 25% of their gross, then they're going to get approved. Or am I understanding that incorrectly?
Yes, different programs. The highest DTI approval I have ever seen, I won't mention the program, was like 73%.
Oh,
Now,
okay. Okay.
because we had about 1.5 million in assets,
Okay.
and we didn't
Well,
generate any income. because of those assets.
Okay.
So, yeah, there's it can be very complicated very quickly depending on product, that credit profile, that asset profile, all of the above. There's depends on your product and the programs. If you're a first time home buyer, most of them do not like you over 49.99%.
Speaking of how much they're willing to pay. I've got a little mortgage calculator on my website. So that's off my
Okay.
website. So that's just a, little mortgage calculator, and they can just pop in their value there. So maybe a $500,000 home and down payment. Now that's something we didn't really discuss when we were talking about the mortgage. And I guess we'll talk about that in a second here. But let's just say 10% down payment would be $50,000. So put that in there, and the loan amount be 450. Interest rate 4%. This must be a really old calculator, huh? We'll go
Typically
with
six,
we'll
six and a
go with
half.
yeah, 6.5, you think, right now? Kind
Yeah.
of 6.49 will be there. So 30 years, and so then property tax 2,400, that'd be about right for this neck of the woods here. And that's a good reason to move to Tennessee. We don't have very big property tax. What
Mm-mm.
about PMI and a 10% down? And
Um,
I kind of interrupted you a minute ago because you did DTI. We got to be careful about the industry jargon. So DTI is debt to income ratio, and PMI is primary mortgage insurance. So what about PMI in this?
on a half a million, depending on FICO score, down payment, I'd put like 175, and that's probably on the high end.
Okay, so there you go. And homeowners insurance will go with 1,000, and
Oh, you
HOA.
better change that to
Uh,
2,400 annual.
all right. Well, I haven't checked insurance lately, I have to admit.
I have. And
Okay.
I'm to the point, every pre-approval, we're calling an agent, we're getting an estimate.
Uh-huh.
Insurance right
So,
now with the two hurricanes back to back, I've seen some craziness. I've never seen it before.
mhm. So just a monthly estimated payment of $4,400 based on everything that includes your mortgage insurance, your tax, home insurance, and HOA fees. And that's I put in annual HOA. Well, there are some HOAs that are 500 a month, but we'll say 100 a month HOA. So I'd have you
Okay.
down to 4,000. And it depends on how ritzy a neighborhood you go into. Frankly, I don't like HOAs, but it's hard to find a house, or at least a new construction house, you can't find that does not have an HOA. Homeowners Association. Again, there I go with the jargon and didn't explain myself. So, but that's the point. There are lots of websites out there, mine included, that have mortgage calculators for you. So you can get some idea of what you're looking at before you jump in.
Talk about debt to income ratio. There's two numbers.
Okay.
We have the housing one, which is just whatever the housing payment is with your homeowner's insurance, your taxes, if there's a monthly homeowners association dues. That number, most lenders like to be around 36% of your total gross income. And then the remaining, we take the housing all inclusive with all other outstanding monthly credit obligations. And that is your total debt to income ratio, which can go, depending on program, product, FICO scores, assets, up to like 50%. A lot of clients just are not comfortable with that bigger number.
Yeah. So, in talking about the down payment here, obviously the larger the down payment, the better. And
Yes,
speaking of the primary mortgage insurance, if your down payment is 20% or larger, then there shouldn't be any PMI, should there?
correct.
Okay. And the other thing, and of course, we don't really need to get into types of loans here too deep, but I am going to mention a VA loan. It's my understanding does not have PMI at all,
Does not have
although
PMI.
there is a initial funding fee that kind of replaces.
For some active and retired military personnel, there typically is a funding fee, different classifications. according to, we have to have a certificate of eligibility. There are rules and regulations according to if you're active, if you're a reservist.
So, as I said, 20% is good.
Mhm.
Anything north of 20% is great. But on the bottom end, there are a number of programs where 3 to 5% is available.
Mhm.
And there are just a few programs where it's 0%, VA
That's
being one of
correct.
those. But
And
you want to talk about those a little bit?
yeah, I think the number was like 2,400, 2,600 down payment assistance programs. Whether
Okay.
or not, if you're a first time home buyer, there's different criteria. Some have income requirements to qualify, but you can get a second mortgage. Depends on the program. Maybe it's a grant, maybe it's a silent second, that you can get, and some lenders will cap it like up to $15,000. So if you want to buy $100,000 house and you want to do a conventional product, the minimum would be 3% down. So you'd need $3,000 plus closing costs. Different conversation, but we would be able to go get, communicate with one of our down payment assistant lenders and figure out what's best for our client and have the client decide. But we could absolutely go get the 3,000, though it does push the interest rates up. It's a great way to help people that are a little cash strapped to be able to get into a home because of down payment requirement.
So the last step in this part of the process is getting a pre-approval.
Correct.
And there is a difference between the so-called pre-qualification and a pre-approval. Would you talk about that for me a little bit?
Pre qualification, I can't even believe we still use those words today. Pre qualification is someone's just going to take a document, put your name on it, say you're pre approved or pre qualified to purchase a home worth X, but they have not vetted income. There are lots of income rules. Not that I want to kind of get in the weeds with it, but it's not unusual for a client to say, "Yeah, I make $60,000," because they work two jobs, but maybe they've only had that second job for 6 months. You don't get to count that.
Hmm.
Therefore, now our real income is really only $40,000. So if you're dealing with a mortgage person that will give you pre-qualification, it's really not worth, unfortunately. I'm just going to spit it out. Not worth the paper it's printed on. What we do, we want 30 days worth of income, 2 years W-2s, maybe potential tax returns depending on the program. I'm not one to ask for documents I do not need. Where's the down payment coming from? Is it going to be a gift? Is it allowable? Can we ask the seller for some credit? But we vet and document all of that. So if we're going to give you a pre-approval, our expectation is you will absolutely get to the closing table unless something unforeseen happens. And that's the difference between a pre-qualification and a pre-approval. And if it's a little complicated, I also have lenders, we can actually go in without an address because they haven't found their property that they want to purchase and get an official underwrite if we have to.
That pretty well covered the topics that I had for today. When we first started out here, I did, as an aside, mention the fact that it's good to have a mortgage professional in your side that knows what they're doing. And I would like to discuss that for just a little bit. It's been, I don't know, about 6 weeks or so, and you know what
Last
I'm
6 weeks.
talking about. I had
Yeah.
a piece of property that I was listing up east of here, and it was under contract, and the contract called for closing in 45 days, if I recall correctly. And the buyer was using some bank down in Middle Tennessee.
Oh,
I'd never
mention
heard of them.
it.
And the bank kept messing things up and wanting more documentation and yada, yada, yada. And we're down to within a few days. I don't remember how many days did it take you? Once I talked to the buyer's
Okay.
agent, and I did not represent the buyer, I was representing the seller. But once I spoke with the buyer's agent and I said to him, get your buyer to call Lisa and see what she can do. How many days did it take you to take over the deal and get it through to closing?
I think we
It
were what, six
it wasn't
business
long.
days? There was like 6 days.
Yeah,
Now we had
it
a
was ridiculously fast.
cooperative borrower as well. I was so disappointed to hear just the lack of communication. Really, in my opinion, what caused all of that from the mortgage professional.
Okay.
So,
Well,
I
in the
mean,
bank, I'm not sure if they were mortgage professionals or not, but
well, yeah, I don't know. Well, I'll just use that statement. But, I have a team, and
yeah.
that is important to me because if I'm sitting here with you, Ed, and I do have my cell phone on do not disturb, but my team goes in and can pick that up.
Hmm.
They don't need to wait for me. I
Hmm.
have a loan partner, I have a processor. So, I get everybody started, and then my loan team picks up. I'm involved throughout the entire transaction, but I have support, which makes me more available to new clients, existing clients, keeping all my partners updated, listing agents, buying agents, title companies. Everybody knows what's going on, no surprises, and communication is key.
Yeah. Well, all I wanted to say was I was highly impressed with how quickly you got that through, and the fact that at the very minimum saved me from having to do a amendment to the contract,
Or
and quite
closing,
possibly saved the contract altogether.
yeah,
That's one of the things I like about working with you, because you are diligent and you do have your team and you take care of stuff. I hate when somebody wants to use a internet mortgage company. That is the worst decision a person could make, in my humble opinion. And the fact is, a local, whether it's you or another local mortgage broker, is generally a much better decision. But like I say, I was very impressed with you closing that in such a short period of time and saving the deal for me. But on the other hand, having a good realtor that'll work for you is important as well. That harkens back to another listing I had about 5, 6 years ago. This one was up in Dandridge, as a matter of fact, where you mentioned you're at today. And I had the listing, and the buyers had their own agent, but that agent was not doing anything to get the process moving forward. And in fact, when it was all over, the buyers put a nice little review for me on Zillow, saying that I was not their agent. They had an agent, but if it hadn't been for me, the deal would have blown up. So you got to work. If you want to make it work for your clients, then you got to get in there and work. But anyway, that's enough of that, I guess. I do appreciate working with you, and thanks for
thank
doing the
you. I
live stream with
appreciate
me
working with
here.
you.
And we'll talk about some more subjects in a week or so.
Okay, sounds
Personally,
good.
I enjoy doing these, and I think they're good for the consumer because they get to see what's kind of behind the scenes a little bit before they get into it. Hope you enjoyed the video and got some good information. And as Sebastian says, thanks for watching and have a good night.